Right. We are live. Good morning, good evening, good afternoon, depending where you are. Yep, we are live and we will start this in approximately 1 minute or so. Very good. Okay. So 1 more minute or less, we get started. If you're seeing this, you can hear me, you can see me, that'll be great. If you can say, put some likes or comments, then I'll know, everything is fine. I hope you can hear me okay. Just adjusting the microphone here. Okay, very good. Hopefully sound working okay. Hopefully video is working okay. As much as I can tell, it does. Just a little test here. Let's just do another test just to make sure. Okay. All right. One thing I've learned is there's always a delay with Facebook and with lives of few good seconds. We're going to get started in just a moment here. Okay, all right. Let's get started. Good morning, good afternoon, good evening, wherever you are. We do these live sessions on a weekly basis, Friday, 10 a.m. Pacific time. I am Dani, and I'm based in Southern California. And today we're going to talk about resilience, or resilient, depending how we want to look at it. And I'm going to explain a little bit more about that in a second. I want to introduce myself because this live goes on 3 channels, being broadcast on 3 live channels and being recorded to our podcast. So if you are here for the first time, then I just want you to know that you can consume this or listen or watch this on a live session like we are right now, and also watch the recording. The recording is available on YouTube. The recording is available on our podcast, and over here on our business page, on Simply Do His business page. We just have to find it and go down, scroll down. We have past recordings available as well. So everything we do, we try to provide information and knowledge and share with you. And it's and it's all being recorded on multiple channels, so you can consume it, you can benefit from it however you see fit, podcast, or an actual video. My name is Dani Beit-Or. I have been a real estate investor since 2002, so I'm getting close to the 20-year mark. Hard to believe that almost 20 years have passed. In my career, I'm not only an investor, I also help and support and guide other investors in making real estate investments. Primarily, my experience and the focus has been rental properties in different parts or different metros of the U.S., in nice communities, I would say middle-class communities, upper middle-class, lower middle-class communities, good schools, etc., in markets that are coming up, that are showing strength and resilience. We're going to talk about that, today. And in my career, I've done some flips, I've done some tax liens, I've done some, a little bit of commercial, a little bit of land, a little bit of not notes, but private money lending. So that's really a very small number relatively to the number of transactions I've been involved with. So for the past 16 years, I have been involved in more than 4,500 transactions, primarily purchases of rental properties in different parts of the country, like I said. This week alone, we are the probably the last week of June 2020. It's been a very powerful, very strong week. Multiple offers have been submitted in multiple metros with multiple agents. So this is a very strong week for us. And it's just good to have something like this happening during the current times that we are going through. So My business, my company is Simply Do It. If you search, you want to look for the podcast, you do Simply Do It podcast or Simply Do It Guided Real Estate Investing, you'll find the podcast. We have a blog. We have properties, that we, website. I'll put all those things, in the comments, or they're already in the comments. We have an education website. So we really put a lot of information out there. A lot of it is free, and we try to really send it, the information out to you guys with quality and not a sales pitch. I think that people are smart enough to connect with people that are knowledgeable and experienced and can help guide them through investing, and less attracted to people who are trying to sell them some product or service or anything like that. So that's not what I'm trying to accomplish here. Now, today I want to talk about resilience, or like I call this, this session today, why resilience is more important or as important as ROI. Okay, so let's just kind of dive into those two main indicators or two main parameters: resilience and ROI. ROI, return on investment. I'm just going to make the assumption that everybody's watching knows what our return on investment is, how to measure. Even if you're not proficient with measuring, that's a whole topic by itself. And actually, there is a session about that, how to calculate the total ROI on investment properties. So if you go to the podcast, you go to the YouTube channel, you go to one of the things. By the way, we're on Instagram now too for the 3rd week. You can look it up and look for how to calculate the total ROI. A whole session just about that. That's why I'm not going to dive into it. So return on investment is a financial indicator that helps us measure the potential or the success of a certain investment. Now, I want to talk about resilience. And especially, I think it's important nowadays with what's going on out there. So when I talk about resilience, I'm talking about. Let me step back. For years, when I looked into where should I consider investing in the U.S., what metros should I be looking at, I always tackled that question, or what's the next metro I wanna start investing in. I always tackle this question with not the ROI, but with the safety or the durability or the resilience of the metro. Meaning, in my mind, see, I started investing in 2002. I really stepped up, and started doing it more on a large scale and professionally in 2004. And in 2007, 8, 9, obviously we all know what happened. And that period, the downturn of 2008 crash, really hit me hard on a big magnitude, right? When I say big magnitude, that means I had multiple properties of my own, so that's obviously it's a storm, and that I had to weather that storm on a personal level. But even with my own personal level or portfolio, the number of investors I've been supporting and working with at that time was much greater than my own portfolio. So I had an opportunity, I had a chance, I had a reality, setting in and saying, okay, we got to dive into those issues and problems that the investors I work with are having, and I got to help them. I got to help myself, and I got to help them. And I made a promise early on in the crash. I made a promise to myself, and I held that promise. I said, any investor of mine that's going to call, even not an investor of mine, just someone else that's going to call and say, I need help. What can I do? Or how can you help me? I will pick up the phone and I will speak to that person. And I did it. I did it, it wasn't easy because those conversations in 2008, 9, 10 were not pleasant conversations. It was all distress, all stress, all issues, all problem. But I made that promise, and I told myself the following. If I take those phone calls from investors that are going through hard times, a couple of things may happen. One, I am in the eye of the storm. I am dealing with it on a daily basis. Maybe there's something that I'm already investigated, looked into, and I can share with that person and help him get out of that problem. That's one. Number two, maybe I can learn something from that person that I can benefit myself. And when I say myself, I can maybe benefit and then share it with other people. So there's also, cross collaboration here. And the third thing was, maybe this person is so much under stress, that investor, for one reason or another, lost their job, issues with the house. I don't know. I don't always know. But the stress was there. And this person needs to vent. And maybe even use me a little bit as a punching bag, which happened a few times when someone was frustrated about something. I said, that's fine. You know what? If I can be that punching bag or express that stress level, let's do that. But I always intended to help that person who invested. I always wanted to give them some advice, some direction, something to look into. If there's anything I could do to help. Many times it did work, and obviously I benefited it too, and made sure it kept propelling to others. And maybe 10 and 11, those type of a negative results started to drop out. And the reason I'm saying this is not because I think I'm someone special. I just a lot of people around me in this business, people in similar positions or in similar situations like mine, being that kind of real estate, kind of professional or expert, however you want to call it. And I saw a lot of those people either disappeared completely, not surprisingly, right? Some of them I haven't seen since. And some of them I just saw they're dunking and they're avoiding those calls and they're not stepping up to the role of helping, their clients, which shocked me and disappointed me. And I told myself, that's not who I am. That's not what I want to be. So definitely have my fair share of mistakes, fair share of issues, fair share of problems before, during, after. Obviously, I'm an investor, and when we do those, when we invest, things happen. So I have we can have a whole different session about that as well. So why am I telling you all of this? Is because mainly, even before the crash, but I think all this resilient concept solidified into my DNA during or right after the crash. And when I started looking at metros in the US, considering, that was my leading torch. Because I always go into a metro and I ask myself, for more than 10 years, when the next crash comes, right? What's going to happen here? How is this area going to, suffer or survive the next crash, knowing it's coming? When? I never know. But knowing it's coming, it's always there. Statistically, or on average, in the US, we have about some sort of a downturn once a decade, right? Obviously, we're having something going on right now. We don't know exactly how this is evolved. We're still going through it as we speak. But obviously, this is something that that's happening right now. So even statistically, we should have had some sort of a downturn coming regardless this COVID-19 situation. But my leading question was always resilient, what's going to happen during this time. And just let me tell you one thing I noticed back in 2008. One of the markets we were in investing quite heavily before the crash of 2008 was the Dallas-Fort Worth metro. Dallas-Fort Worth metro is in my opinion, a very resilient market altogether. That's not saying there are no issues. That's not saying there's not going to be problems. That's just saying that when the crash of 2008 happened, the Dallas metro, the DFW metro, investment-wise, real estate value-wise, held its number. It actually went up about 1% during that time. 1%. 1% sounds like nothing, right? But when everything is crashing around you, and you are at the point where you're not even, you're staying flat or even going up 1%, that's amazing. That's amazing, okay? That's what I call resilient, okay? Now, when the COVID-19 kind of came to a full attention mid-March, for all of us, one of the first thing I did few days in, something around the 20th of March, is I called all my teams. I set up a conference call with all the property managers and all the agents I work with in multiple US metros. Those are people that I interact with them, let's say on a weekly or bi-weekly basis. I speak to them. They are not my direct employees, but they are part of the Simply Do It network, right? Those are long, multiple years relationship. We talk frequently. They understand that I see them part of the team. I help them succeed in their businesses. They're helping our investors. So it's a network, a very, knowledgeable or network, right? We all know each other very well for many years, many transactions. So I brought people. We just wanted to kind of figure out. At that time, are we going to see a number of defaults? New, right? And I spoke to all the property managers kind of April 10 and a little bit after the first 10, 12 days of transactions, and we had issues. All of the issues that we had were solvable. Communication with the tenant. I was shocked to see the number of issues we had was relatively small. Hopefully, is it better now? I hope so. Okay. I'm going to try and switch mic because I'm getting some feedback here. There's a... Okay.